Welcome. I'm going to look briefly at the completed contract method of accounting for long-term contracts. I'll remind you that the percentage of completion method is the preferred method, but there are times when it's impossible to reliably determine the progress towards completion, to estimate the work that is yet to be done. So in situations like that, we use the completed contract method. Some long-term contracts really have only one critical event, and that occurs when the contract is complete. And so, of course, in those cases, you would use the completed contract method. For our illustration, we're going to look at the same numbers that we used in the previous example. We have a contract for $4,500,000, and of course, in planning this, they probably still estimated the total cost to complete, but it's irrelevant for our purposes. The one difference, of course, in this situation is that we will not be able to calculate the estimated cost to complete. That's basically the whole point of using the completed contract method. So life, from an accounting point of view, is in many regards simpler. As the costs are incurred, they're posted as a debit to construction in progress. As the billings are made, they are debited to accounts receivable and credited to construction in progress. So the billings on construction in progress and the accounts receivable, absolutely no change there. It's exactly the same as it was under percentage of completion. So the difference? Well, at the end of the year, no additional work is done. It's impossible to estimate the cost to complete. And so all of the activity is recorded on the statement of financial position. And at this point, what we have is these two numbers. And so at the end of year one, we have a debit to construction in progress and a credit to billings on construction in progress. The net amount of these is recorded on the balance sheet or the statement of financial position as an asset, since we have construction in progress in excess of billings. The following year, as additional costs are incurred, they're posted directly to the construction in progress account, on the balance sheet, to the construction in progress account. This continues until the contract is complete. At the time that the contract is complete in the third year, we can see that we have a total amount debited to construction in progress. That's for all of the costs that were incurred over the 3 years. We also have the final amounts of the billings on construction in progress. Because the job is complete, all of the billings will have been done at this point. The construction in progress account is credited, and the cost of sales, construction expense, is debited. And of course, the billings on construction in progress account is debited, and the revenue account is credited. So when the construction contract is complete, at that point, the total amount hits the income statement, and we show the net revenue. Now you probably remember that that's exactly the same gross profit or net revenue as under the percentage of completion. The difference is it's all reported in the final year. Those are the differences. Just one other thing to bring to your attention, just very briefly. In the second year, we'll see that the balance here, we actually have, because of the construction costs that were billed and the, just take that away for a second here so you can see it more clearly. I just want you to see that in the second year, the amounts, the balances here, oops, hang on. Technology, ain't it grand? The balances at the end of the second year, the billings exceeded the costs that have been incurred to date. We billed $3,300,000, but the construction in progress account we've only incurred $2,916,000. The two are still netted against each other on the statement of financial position, so the two general ledger accounts are netted against each other. At the end of the second year, it would show as a liability simply because it's a net credit balance. It's like unearned revenue at that point. So hopefully that helps to explain the differences between the two methods and clarifies how to use the completed contract method. Thanks very much and happy accounting.